I'm James Anderson. I am the chairman and CEO of Guanajuato Silver.
Well, thanks for the short, pithy start. I know it's early in the morning, but I would expect more from you. James, good to see you again. I haven't seen you since Quebec. Did you get back safe and well? You didn't contract any COVID or anything?
No COVID for me. You got a chance to meet my lovely wife when we were in Quebec.
The better half, yeah.
We got one of those old-fashioned flus. We assumed it was COVID, but we took several tests. It wasn't COVID. Just the old-fashioned kind of flu bug.
Very good, very good. Good conference, lots of good conversations, lots of good presentations. Really, really enjoyed that one. But I enjoyed catching up with you, but you've actually been busy. You've been doing more stuff, so I'm having to see you more often, which is, I saw the Great Panther deal, but also seeing you've gone to raise the 15.3 million that it talks about here. Remind me again why it's a good time to raise money in this market.
Well, I think it's only a good time to raise money in the market if you can use that capital to get something at a fantastic deal, and that's what we've done here with the Great Panther transaction. So we're buying 2 mines that are right in Guanajuato, which will complement immediately our mining operation in Guanajuato, and then another mine a little further north in Durango, which is operating right now, which is very high grade. So this will all be immediately accretive to Guanajuato shareholders.
Okay, so it's all relative, you're saying to me. So we better talk about the Great Panther assets then. So the Topia mine, I guess, is already producing concentrate. So that's a good start. But what's it going to add to the bottom line, or quite frankly, the story?
Well, what does it add to the story? I think the whole story about us being an active, growing silver and gold producing company. And really, I like to use the word silver and gold producing business. So many of the other junior mining companies really are, their exploration stories, they're drilling off an anomaly, kind of hoping for the best. Day in, day out, we're trying to make our business better. It's a difficult environment to do that in, but what does that do? Well, it affords us the opportunity to buy 3 mines, 2 production facilities at pennies on the dollar, pennies on what they're worth.
Right, but coming back to what's it going to contribute? So we talked about Topia being a current producing mine. Can you just tell us, remind me of the sorts of numbers there, and also with the other couple of assets, again, what does that bring the story? What does that whole package now look like?
Sure, so sort of some headline numbers to help your audience. Topia is currently producing 1.1 million silver equivalent ounces per year. It was just a couple of years ago producing 1.8 million silver equivalent ounces per year. And our team believes that with a little bit of capital and a little bit of tender love and care, we can move that operation back to that number. It has been in almost continuous operation since the 1940s. So there's lots there. It can keep going on for a long, long time, but it has to be treated with some respect. So 1.1 million can go to 1.8 million. Also, the grade, Matthew, is very noteworthy on a silver equivalent basis. Now, this is a little different for us. In Guanajuato, we mine silver and gold, period. At Topia, it's really a silver, lead, zinc kind of epithermal system. But on a silver equivalent basis, it's about a kilo of silver per ton is the resource that they have there. So, very good grades.
Okay, and what's that actually cost you then? I assume you're spending a bit of cash, a few shares.
Yeah, that's right. So the whole transaction is valued at $14.7 million US dollars. We pay $8 million in cash, and the balance in our shares.
Right. Okay, and what, $8 million up front, cash straight out the door?
Yes. Yeah, that's right.
Okay. I mean, how do you go about negotiating something like that in an environment like this? Because it's like I say, everyone's been kind of crushed. Great Panther have obviously got their own troubles, their own balance sheet to look after, so they've got to be pretty tough on you. Was this the best deal that you could have done?
Oh, I think so. These deals always take so much longer than you think they will, and our discussions with Great Panther go back 18 months. And I was talking to the previous CEO at the time. In the interim, Great Panthers had I don't want to get too deep into their problems in this interview, but they've had some problems at their Brazilian operation. And then they've also had some problems in Guanajuato, where last November they had to close down their operations because of a lack of tailings capacity. Well, we're not constricted by that right now. And so their operations, which had to close down in November, the two mines, we can start mining again and shipping material from there to El Cubo, where we have excess capacity for processing almost immediately.
Right. Okay. And yeah, I kind of want to get into the kind of the physical proximity and I guess complementary components in a second. But so I remember reading this. You've got some additional payments that you could have to make subject to silver hitting certain prices, or is it a little bit more nuanced than that?
Yeah, that's right. So no, I mean, you've got it exactly right. So we give them after the $14.7 million, we give them $500,000 additional dollars after we've produced 2.5 million silver ounces from their operations. Right. So that's going to be probably 24 months from now. So okay, that's fine. Because they're silver ounces, Matthew, not silver equivalent.
Right. Okay. Okay. Interesting. Okay.
Minor point there.
Yeah.
We also pay them $750,000 if silver goes to $27.50 for a 30-day period. It will be the happiest check that I write, and we pay them an additional $750,000 if silver goes to $30 and stays there for a 30-day period.
So are these cumulative or are these one-off? What is it? Is it 1 Is it $2 million? Is the total payment here?
That's right. It's $2 million in additional contingent payments. Correct.
Got it. Okay. So let's come back to the assets and the kind of the where they are physically in relation to each other in terms of any sort of cost savings or benefits to you in terms of your current operations, and how you kind of feed the beast, as it were, and start keep producing these ounces. Right.
So let's start it with the two mines in Guanajuato. Right. So for your listeners who maybe don't know about our company, in Guanajuato we have a mine called El Cubo and a processing plant that can process about 55,000 tons of ore per month. Currently, we're operating at about 30,000 tons. So we have excess capacity. Now, the two mines in Guanajuato that we're buying, one is called San Ignacio. San Ignacio is a mine without a processing plant. For 10 years, Great Panther has been trucking material from San Ignacio, about 16 kilometers, to their processing plant, almost in the middle of the city of Guanajuato, and would process material there. That journey takes about 45 minutes. The journey from San Ignacio to our processing plant is a little further, right? It's about 35 kilometers, but it's only going to take about 15 or 20 minutes longer because from where it is, we get to use the highway system on the south side of town. So it's a little bit faster of a journey. So it is a little bit longer of a journey, but from an efficacy perspective, we can start mining there within weeks, really, of us taking control of the operation, which we expect to happen in about 30 days.
Right. Okay. And so
then,
yeah,
go ahead. And then
I'm just so intrigued about the okay. So $8 million going straight out the door straight away leaves you, 7-ish plus whatever you had in the kitty prior to that. What are you going to be allocating that for? Is it really just kind of the merger of these facilities and operations, or are you still kind of going after this organic component in terms of the exploration and expansion of the?
Well, we continue to spend money on exploration. I think it's it's a necessity. I think it's a mantra of our company, and I think that we if we curtail that, I think we go down a path that we don't want to go down. With regards to, I guess maybe the best way to answer your question is yes. We raised the $15 million that we have lined up for this deal. 8 goes out the door. Closing costs and working capital assumptions on closing, we may well have to trade dollars with Great Panther, as a working capital zeroing out at closing. Okay, so that might cost us a little bit more money. And to your point, now that we've got 5 mines and 3 processing facilities, do we have enough capital to make sure that we're in the game here? I think we do, but it's not like our coffers are going to be overflowing. So we will have to be extremely disciplined in how we spend the money in terms of CapEx going forward. But we've got a base of much more production to be able to work with.
Right. So, okay. So the picture I'm seeing in front of me is like there's these sort of satellite assets, which you've got to kind of bring together in one highly efficient production process, right? And you've got some money to kind of play around and tweak things to allow you to kind of try and be more efficient. The story remains a case of one of consolidation in a kind of small area. How do you recharge the batteries, as it were? I'm going to assume, okay, you've got cash during a very difficult period in the marketplace. I'm assuming that this is a dip like there have been many, many times before in the market, and we can recover to a new level, a new higher level, or something, whatever that may be. You've got to put your foot on the pedal at some point and say, well, look, here's the big idea. Here's the big play for this company. We've always done what we said. We've been aggressive. We've delivered a producing project in a accelerated time frame. We're making money. We're taking care of the balance sheet. We're able to raise capital where perhaps others are struggling, meaningful capital, and we're doing this roll up. But is it in itself going to be enough? Where's the blue sky come from?
Yeah. Okay. So I think it's a good question. If you look at a lot of the other mining companies out there, they want something that's bigger, more expensive, and I think in this marketplace and in the marketplaces that we've seen previously, most of them don't work, right? So what are we doing differently? Well, the first time that I went to Guanajuato, I may have mentioned this story to you in the past, but the first time that I went to Guanajuato, what struck me was you had a 450-year-old mining region. There were 4 processing facilities within 26 kilometers of one another, and not one of them was being used to capacity. And I thought, this is a textbook in consolidation within the mining industry and consolidation within business generally. Our first step in consolidating this region was to purchase El Cubo last year, so we could then have our Pinguico project and the El Cubo mine and mill operating. From just purchasing that last April and getting it back all up and going last fall, we now are making this expansion. So that's pretty fast in terms of growth. There are other areas to expand within Guanajuato. I don't see any benefit in a company of our size all of a sudden going to Africa or going to the Yukon. Wonderful places to do business and wonderful places to do mining business. But we have a certain expertise. It's not expertise everywhere. I think that to use that expertise in a focused manner, I think that has more strength to it than others. With regards to Topia, it's a little bit further afield, right? It's not in the state of Guanajuato. It's in the state of Durango. I would be less enamored of this idea if Ramon Davila wasn't our president and head of all Mexican operations. He was the economy minister for the state of Durango for 4 years. The people of the little town of Topia, they know Senor Davila not only as a great miner, but also as an important politician in their state. So that's an important element of what we're doing. And then with regards to Topia itself, I mentioned that it had been in production for many decades. It was owned by Peñoles for since the 1940s up until 1990. And then Peñoles got to be such a big company that the small mine at Topia didn't quite fit into their portfolio. So when they went to sell it, Matthew, one of their executives put up their hand and said, "Well, if we're selling this thing, I'll buy it." And then he held it right until when Great Panther bought it in 2004. So it's a mine that keeps going and going and going. We have some ideas that in the medium term that we can use that as the production facility there as a hub and spoke operation in Topia as well.
Okay, so the sum of the parts is your pitch. We can make these things sing because we're going to pick them up cheap. The sum of the parts means that, as far as we're concerned, this is the best use of capital for your shareholders, your company. Is that where we're going with?
Yeah, I think that's right. And I think, if you look at the Guanajuato assets especially, so, okay, they had to shut down in November of last year because of lack of tailings capacity. Okay, great. What other company can take advantage of that situation? Why? There ain't many, right? But we can, because just down the block we have excess capacity at our tailings facility, but also at our production facility.
Okay. Well, I think for me, it's like, I was impressed last year with what you did in terms of the speed at which you moved, and quite a simple idea, but it was executed well. I want to see. And I like the continued ambition, making this acquisition and perhaps looking at others in the district where perhaps there's not a lot of competitive tension. It might allow you to continue to buy well, but you got to make it work. It's got to sing together, and that's what I'll be looking for from you.
Well, I think it's well stated. I mean, it's all about execution at this point. These are smallish underground mines, but together, vis-a-vis our market cap, I think it offers investors a lot of value. Certainly, enormous upside in relation to the precious metal prices and to the silver prices.
Right. If we look as investors, once this phase that we're going through, this dip that we're going through at the moment, obviously precious metal prices, a lot of pressure on it in the last week or so as well, silver and gold. Is when I look at the investments that I'm thinking of investing in, and I'm looking for return on capital invested. Do you think you're going to be able to stand up against some of the peers in country? I'm talking about Canadian juniors with precious metal projects in Mexico. Do you think you can be confident about where you'd come out on that list?
Yeah, I am. I am confident about that, and I'm mostly confident about that because of Ramon Davila being in charge of our Mexican operations. He's the best miner that I've ever worked with, and he's the best manager that I've ever worked with. He's cognizant of driving costs lower, and what we've done quarter on quarter, and what people maybe don't see right now is month on month. We have lower cash costs, all the way through. People will want to see all-in sustaining costs as well, Matthew. But frankly, for our company, it's not relevant right now. I mean, we're spending lots of money on capital. We're a startup company. Give us a couple of years before we start looking at all-in sustaining costs. It's cash cost that's the most important thing. It's the most important metric for our business right now. But Ramon is cognizant of this. He built First Majestic. He was the chief operating officer there for 10 years through the whole growth period, making that a multi-billion-dollar market cap company. And I think, working with Ramon, it won't happen by next Tuesday, but some Tuesday in the future it might.